watching The Opening Bell, and I'm your host, Nikki Mirchandani. Well, Indian equity markets are poised for a flatter start on Monday amidst mixed global cues. If you talk about SGX Nifty, that's indicating of some amount of consolidation coming in for the markets after nearing around that record high level. US shares, they ended lower on Friday as Microsoft almost receded from the record high level. Talk about the Asian stocks. They have got off to a slow start this morning, eyeing China's stimulus and Powell's testimony. At this point of time, if you talk about the FII and the DII data, FIIs have bought shares worth around 794 odd crore, and support has also been lent in from DII, which have bought in shares worth around 681 crore. That's the numbers coming in terms of the FII momentum building in roughly. It's been a good show coming in even from the foreign institutional investors. That's that in terms of the trade setup that we have this morning. But let us get going and discuss some stocks and strategies with Prashant Sawant, the co-founder, Catalyst Wealth, who's joining us right now. Good morning there.
Hey, good morning, Nikki, and good morning to all the viewers.
All right, how is the trade setup shaping up for you? PCR ratio at least indicates a little bit of overbought zone for Indian equity markets. You think a bit of pullback, or you think sky is now probably the limit for Indian equity markets and they're expected to scale in a record high level anytime soon?
So, Nikki, here I would like to cite an example from a real life scenario. When we go to a party, we always try to exit, or say for a cricket match, we try to exit 10-15 minutes before people start leaving so that we can get our own set of a vehicle, whether it's an auto or a cab. Why we do that? So that we are not a part of the rush that is trying to come out together. I would advise the same thing now. We are going on a major emotional level of 19,000 and somewhere around 18,950, 980. I would advise, at least on the index front, if you are long, book profits and take the sizable amount out of the table so that you are having a decent amount of profit already booked in Nifty. But keeping a bullish view on the index, you can definitely stay long in stocks and specific sectors. At the same time, if I were to talk about levels on Nifty futures, that is June futures, I would say 18,950, 980 zone happens to be a big resistance. And obviously the emotional number of 19,000. At the same time, the downside support, I would say, is around 18,780. But if I compare Bank Nifty against this, then I would say that Bank Nifty currently has closed somewhere around 44,200 in terms of June futures. If it happens to cross 44,350 in June futures, that is say around 100-150 points from Friday's close, then definitely a fresh long can be initiated and the stop loss should be kept at 44,100. That's like a 200-250 point risk. We can look at targets around 44,600 to 44,700. I think from the current level, it makes more sense to get into Bank Nifty than to get into Nifty. Obviously, if Nifty closes above 19,000, we'll always have a chance to re-enter, say 40-50 points above. But that would be an entry with more conviction. So my advice is book profit in Nifty around 18,950 and stay long in Bank Nifty. And my view on the market is bullish. So definitely look out for dips in the market or opportunities to buy.
All right, one can go long in Bank Nifty. That's the word coming in. But apart from that, any three profitable bets that you would, have for our viewers out there, which are profitable ideas for the day?
Yeah, so definitely before that, Nikki, I'll have an update. So last Monday when we met, I think I had recommended L&T Finance Holdings, which was trading around 105. And in the week itself, it went to around 124. So it was like a 16-17% move, a very nice week, I would say, for the viewers who followed us. For today, I think I have three stocks on my radar. One would be AB Capital, that's Aditya Birla Capital. I would have a stop loss at 171 closing basis, and I'm looking at a target somewhere in the range of 190 to 195. I think this is almost ready for a big move. It had resisted here a couple of times. It should take off now. The next one that I'm targeting is Bata. And here my stop loss would be 1590 spot closing basis. And I'm looking at a target around 1650 to 1670. And one pick that is on my radar is Midani. And I'm looking at a stop loss at 240 closing basis, 240. I'm looking at targets around 310 to 325. I think this can be a big positional mover. So AB Capital, Midani and Bata would be my three picks for the week.
All right, AB Capital, Bata and Madani. These are, Midani, these are going to be 3 stocks that Prashant has recommended this morning. Apart from that, we also have bunch of stocks that need to be on your watch list, which includes the like of Kalayan Jewellers, Dr. Reddy's Lab, Axis Bank, Manapuna Finance, amongst others. Let's address Kalayan Jewellers first, where Warburg Pincus has backed in. The entire investment fund has offloaded more than 6% stake in the company. That's a big sell-off coming in by a big buyer. It's almost sold in 6.2% stake at an average price of around 113 per share. Nomura, Franklin and BNP Paribas, these are among some of the buyers, and they have lapped up equity to an extent of 3% on this one. Talk about Dr. Reddy's. Now, if you see slew of FMCG companies, beg your pardon, pharma companies, they've been coming up with reports day in and day out where we're seeing the GMP inspection is concluded and the EIR has been handed over with zero observation. Dr. Reddy is the recent one to this list, where US FDA has closed in the GMP inspection at the Hyderabad API manufacturing facility. The inspection has been completed with zero observation, and with this, the company has received the establishment inspection report. That's a bit of positive development coming on that one. Manapuna Finance, that's another one. A bit of negative. Sentimentally, financially, it's not a big knock. But sentimentally, this is expected to weigh in. RBI imposes a monetary penalty for non-compliance of NBFC provision, and that is to the tune of 20 lakhs rupees. It's not a very big amount. It's just a sentimental impact, perhaps, that you would see on this counter. Axis Bank, where the board has appointed in NS Vishwanathan as the non-executive chairman. The appointment is for 3 years. That's also one of the stocks that need to be on your list. But we're going to be keenly eyeing the markets open right now, because we just need to see if it's crossing around that record high level, scaling a new high, sensing some optimism, or it's just like at this point of time, global cues remain mixed. SGX Nifty indicates somewhat of a consolidatory to flattish trend coming in for the markets, but that's market Nifty 50 right now. If you look at the opening, we are looking at gains coming in for markets. 18,862 level, that's the level. To scale the highs, we need 18,888 level. So that's just flirting around that level, but it has opened higher with gains of around 0.1% out there. Remains to be seen if today is going to be the session where we're going to be way past or scale in the record high level. Talk about the Bank Nifty. That's also one where probably the support is being lent in from. It's a flat start, but with a positive bias coming in for Bank Nifty. Remember, Prashant has already suggested an along on this one. So that's the word coming in. Mid-cap index, well, outperformance yet again from this counter. Day after day, we are seeing mid-cap index outperform the larger counterparts, and today's day, it's no different, at least in the opening deals. Small cap too, pretty much in sync with how the broader counterpart is doing, and is up with gains of around 0.5% out there. Talk about other sectoral indices that we have on the list right now. IT has been doing well with gains of around 0.4% out there. In terms of other sectoral indices that we have, auto index is faring fairly decent with gains of around 0.3%. And in terms of pharma index, the entire basket is in green with gains of around 0.6% out there. So that's the word coming in for the entire sectoral indices right now. The market seems to be pretty much buoyed with the optimism that is sensed across the sectoral indices. Don't see any amount of profit booking just as yet, at least in the opening deals with any of the sectoral indices. Metal index is also doing well with the hope of China stimulus. That's the one auguring well. Metal entire index, for the last couple of days has been holding up. And today's session is no different for metal index. Consumption story also remains intact overall. Talk about the top gainers and the top losers that we have on the list right now for Nifty 50, just to see where the market breadth is right now, clearly in the favor of Apollo Hospital, JSW Steel and DRL. These are some of the top gainers that we have on the list right now. Tata Steel, Britannia, Tata Consumer Products. These are some of the other top gainers that we have on the list. Talk about top losers, just to see where the breadth is right now. Financials and IT. Kotak Mahindra Bank, Wipro, Coal India. These are some of the top losers. Tech Mahindra and TCS. Again, it's IT index which is beaten down. And that is something, most of the IT stocks, beg your pardon, are probably, capitulating to some amount of selling pressure right now. And these are some of the top losers that we have on the screen. Talk about the advances and declines. Advance 37, declines 12. Market breadth right now remains to be in the favor of advances. Prashant, come in on this one. It's a positive start coming in for the markets. A bit of cautiousness for Bank Nifty overall. Would you have any different call to make at this point of time?
So I think it has opened in very much in accordance with what we were expecting, and it has been a mix and match. So I think Bank Nifty currently, if you see, is almost hovering around Friday's levels. It has not moved much. At the same time, if you look at Nifty, it is almost showing the nervous reaction to 18,950. So my suggestion would be to trail Nifty June futures. Currently, it's an 18,920. Your trailing stop loss has to be around 18,850 because that's like a decent level, 50, 60 points down from the current level. At the same time, with regards to Bank Nifty, if someone is entering at this level, my stop loss would be somewhere around 43,800, which would be a 200 to 50 point risk. And I would look at targets around 44,400 to 44,500 comfortably. Overall, I think at current level, it would make sense to enter into Bank Nifty as compared to Nifty.
All right. So that's clearly also, Prashant, we've seen some amount of drubbing on the IT counters, and it seems relentless in a market like this. Today also we're seeing most of the IT stocks which are beaten down and are probably going against the tide in a bull market like this. What's your view, and anything that looks attractive within the IT space after the recent correction that we have witnessed?
So I think, Nikki, one stock which definitely is kind of making its presence felt at the current price is HCL Technologies. It's currently around 1150 in spot. I think this looks good and it may move to higher levels around 1175, 1180. One needs to maintain a stop loss around 1135 closing basis and hold a position or look out for a fresh entry. I think out of the whole pack, this is looking good. And the next stock, which has been on my radar for a long time, is Birlasoft, currently quoting around 340 in spot. 330 would be a good stop loss, and you can look at targets around 355 to 365. So I am kind of looking at a mix and match, staying away from the frontliners, Infi and TCS, and focusing on these ones.
All right, Prashant, we are going to leave it at that. Thank you so much for taking out the time and joining us this morning. All right, let's address in the fundamental side of the story. We have enough and more to talk about. We have probably fresh triggers coming in for the markets. RBI has passed us. Fed outcome is passed us. Now, probably market needs more cues to travel in the direction of scaling the record high level. And to join us to take the discussion forward, Abneesh Agarwal, Head of Research from Prabhudas Lilladher, joins us this morning. Good morning there.
Good morning.
All right, I'm going to start off by asking you about the mid-cap index first, because that's where the outperformance is coming from. It's, day after day that we're seeing the entire basket doing well and scaling new highs. In the entire space, any particular counter that stands out for you and it's got a high return potential here on?
You see, mid-caps are actually giving very broad-based kind of a rally. So it is not that there is some, you can say, particular set of mid-cap stocks which are doing well. So it's very broad-based rally across sectors, across segments. I think from here on also, I think one can look at, say, for example, stocks like, say, Ashok Leyland is something which we have been recommending. The stock is making, I think, new highs at around 165 or rupees. So the kind of momentum which is there in the stock with regards to, you can say, the volume, the margin improvement which is happening, and the overall momentum which is there, we believe that there is a lot of, you can say, room still in Ashok Leyland to make money from here. One of the other mid-cap stocks which we are quite positive about is Sumitomo Chemicals. It's a MNC, is majority held by the parent. Currently, the entire agrochemical sector is not doing well. The stock has corrected from, say, 550 to the current levels. On the concerns on, you can say, slow demand as well as the pricing issues both domestically as well as in the international markets. So we believe that the current prices offer a attractive entry opportunity if we take, say, an year or 15 months kind of a view. Now, as regards, you can say the broader, I think it is the mid caps and the small caps which are really doing well, and I think very difficult to, you can say, pinpoint any particular name because the rally is so broad based across sectors. Whether you look at consumption, whether you look at, say, your capital goods, travel, banking, hospital. So I think the rally is very broad based. And this kind of broad-based rally in your small caps, mid cap, we have seen after a considerable period of time.
Sure. We were also China stimulus metal commodity as a pack has been doing well. And with that in the background, HEG and Graphite India also probably, according to most of the experts, can be used as a proxy plate to capture on the demand that the steel industry has been witnessing. I would want your assessment of within the metal space, what do you like? It's the ferrous or the non-ferrous? Or the second part that I'd want to understand from you is, do you think there's a further upside for graphite electrode makers right now?
Okay, you see, as far as your metals pack is concerned, the non-ferrous metals, particularly, say, the companies which are into aluminium led by Hindalco, they have been doing far better than the ferrous part because the metal prices have been depressed globally and the quantum of orders and the realization in the international market have been lower than what they used to be. So per se, the non-ferrous part looks to be better than the ferrous part. Now comes the second part on the, you can say, the companies which are into graphite electrodes, your factories and all that. So looking at the fact that all the major ferrous companies, whether it is Tata Steel, JSW, SAIL, so everyone is looking at significant expansion in capacity over the next few years. So definitely the demand for all the consumables in the steel industry, that is going to increase. However, I think one should look at, say, medium term kind of a scenario and not essentially the near term or the immediate term. Because in the immediate term, the steel industry is under pressure, but if you look at, say, slightly medium to long term, I think that there is a lot of momentum in the steel industry as far as your demand and capacities are concerned, which should benefit the, you can say, graphite electrodes, factories and all the consumables.
All right. So now, Amish, I'd want to understand from you that now since FOMC is past us, RBI is past us, what is the trigger that you will be watching out for? Would it be FMCG basket overall? It's probably the monsoons that will now have a bearing on most of the packs. What is your cue to watch out for the markets? With the markets almost nearing the record high level, what do you think will be the next few trigger points for equity markets?
This is a major re-rating or the up move in the market has happened because we were having negative FI flows from the last, say, 12 months or so, and which have got reversed in the last month or two. Now, incrementally, if we look, I think at the current juncture with the inflation coming down, economy doing well, things are looking good. But I think the biggest factor to watch out for seems to be monsoon and El Nino, because monsoon has been very tepid so far. And the El Nino can actually impact the, you can say, the rainfall more so in the month of, say, August and September, which can have bearing even on the Rabi crop. So I think the biggest factor to watch out for is how the monsoons pan out more so in the next couple of months, because that will actually determine how sustainable this trend is going forward.
All right, Amnish, we'll leave it at that. Thank you so much for taking out the time and joining us this morning. All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and for rest of the day, stay tuned into moneycontrol.com and Moneycontrol app.